our net profit. Next we are going to the balance sheet. So for the balance sheet, same applies. I don't have a ruler. I'm going to use my hands. I'm going to use my hands. So we know that we have remember this whole thing is given with respect to 3 zeros, so we have not to forget to indicate that. Okay, so of our cost here, depreciation, net book value. Then we're going to start with our non-current assets here. We're going to start with our non-current assets. So non-current assets, the first asset going into the question, we have land at cost. So land is a non-current asset which does not depreciate. So land, the figure for land was a 1510. 1510 doesn't depreciate, so the figure will go in the last column. Next we have buildings. The buildings figure itself was 8,300. The depreciation that we calculated here, depreciation of buildings was 166. So 166 plus accumulated depreciation. Accumulated depreciation of buildings, it is 1020. So plus 1020, that is giving us 1186. 1186 minus the 83,000 minus the 8300, we have 7114 here. Next we go to our warehouse and equipment. The figure is 1800. The depreciation that we calculated here was 270. So the 270 plus accumulated depreciation of warehouse and equipment, which is 290, we have a 560 minus 1800, we have a 1210. Last and not the least, we have motor vehicle. The value of motor vehicle is 1680. Then the depreciation that we calculated for motor vehicle was 420. So the 420 that we calculated in the income statement plus accumulated depreciation of motor vehicle, which is in this case 620, we have a 1040. So 1040, we're moving it from 1680, so we have a 640 here. So if we add the three, these are not important, yes, but we can still add them. You can put a line and still add them, but they're not very much important. We can just end it there. Then we're going to add what is in the net book value, the last column. So we have a 1510 plus 7114 plus 1210 plus 640 plus 640. So we have a 10474. Next we are going to move to our current assets. So for current assets, the first thing that will appear is our stock. So our stock figure, remember stock, when the stock that we're talking about is the closing stock, which is never found in the trial balance. So our closing stock was 1,660,000. Remember, 3 zeros are already on top, so we're just going to get the 1660. Then we're going to go to the receivables. So receivables figure was trade receivables 810, but remember in the question they said trade receivable balance is totaling to 6,000 at the written off. So we're going to remove the 6 as bad debt. 6 like that, we put it in brackets. Then also they're saying and specific allowance for receivables of 30,000. So we're going to remove, since we say trade receivables less provision for doubtful debts. So the provision, remember we use the new provision. In most questions you'll be given a percentage which you're supposed to calculate, but in this case it's already been calculated for us as 30. So we're going to say less provision for doubtful debts or less allowance for receivables, which is a 30. So from the 18 we're removing a 6 and a 30. So we have H10 minus 6 minus 30, which is giving us 774. Next we have our cash. In this case our cash is at the bank. Okay, so we have our cash which is 140. From cash, current assets, we are saying those assets that can change from one form to the other. No wonder stock, if you sell stock today it will change to cash, that is, you sell it on cash. If you sell it through the bank, it will change to check. So those things that can change form. Then the same stock or goods that are available for sale, you can still sell them on credit. That's where the data thing is coming from. So here we're talking about those things that can change form, as well as prepayment. So on prepayment, we have distribution cost prepayment. Prepayment are here, closer here. So we have distribution cost prepaid. Distribution cost prepaid, which is a 60. Then we have administrative expense prepaid. Administrative expense prepaid, which is a 70. That's all. So we're going to add these things here. So on top we have 1660 as our stock, plus 774 plus 140 plus 60 plus 70. We have a 2704. If you add it to our 10,474, then let me confirm, add it to our 640 here. Have a 12, 10, 12, no, it's a 12. Okay, so this is a 1240. So it was 1800 minus 560, which was a 1240. This one is a 60, not 0, not a 500. So we have a 1240 there, plus 7114 plus 1510 plus 640. So this is 10504. So that is a 504 plus 2704. So the net asset figure is 13208 as our net asset, financed by equity. Remember, equity, this is a company account. We have different types of equity. So on equity part, we have ordinary share. On ordinary share, they're saying code up share capital, ordinary share of 25 ngwe per each, which is giving us the total of 1,200. Then from there we have share premium. Our share premium is 2470. From there we have our retained earning. Let me say the net profit that we had found in our trial balance. So you can equate retained earning or net profit. So the net profit was 73. 73.58. So we're going to add. So we have a 1200 plus 2470 plus 73.58, which is giving us 11,028. Okay, 11,028. Next, remember we say asset is equal to capital plus liabilities. So we are done with the asset, which is funded net asset. Then we are going to the capital plus liabilities. So this is the capital, equity is capital, so this is the capital thing. We are going to the liabilities. We have two types of liabilities. We have current liabilities, so we're going to start with current liability. Current liabilities, we have creditors itself, or what we call trade payables. So our creditors figure here is trade payables figure is here, H20. That is our creditors. Then also there was that loan note. So from it was 10%, which was given as 100, but now there's a loan note which is appearing on the debit side. Loan note, which is a 50, which means from the 100 kwacha, this 50 was paid. The other one is still remaining that side. So we have a loan note, which is a 50, which is remaining. The other 50 was paid. The one that is appearing on the debit side. These dividends that have been declared and paid, if they were just declared, we were supposed to bring them here. But since they were already paid, there's no need to bring them here. Wana, bestie? So then from there, we have our accruals. Accruals are our current liabilities. So for the accruals, we can write them as accruals. Then we sum up the total. We have 120 plus 190. 120 plus 190. She's giving us a 310. From there, what other current liabilities do we have? I think none. If we had the suspense, we were supposed to take it there as well, but we don't have any other current liability. So current liabilities will end there. We'll just get the total. So we have 830 plus 50 plus 310. It's giving us a total of 1,190. Then from there we'll go to long-term liabilities. Long-term liabilities, we only have a long-term loan. So we have 10% loan. So this loan itself was 1,000. In this case, since of 3 zeros on top, it was 1,000,000. But then the 10% was the interest, just which we are talking about the time we are talking about interest. But this time around, we are talking about the loan itself. So the loan itself is 1,000. The loan itself is 1,000. So 1,000 plus 1190 plus 1,000. We have 2190. 2190. 2190, we add it plus the 11,028. 11,028. 1 to 18. There's a mistake somewhere. Creditors figures. Creditors was 820, not 830. Sorry. Creditors 820. So the 820 plus 50 plus 310 is supposed to be 1180. Okay, so 1180 plus 1,000, it was supposed to be 2180. So 2180 plus our 11,028 on top, we have a 13,208. You will go through with your calculator. So we have a 13,208 as well. This is our equity stroke liability, which has balanced with that one, which means everything we've done here is correct. Yes, so the only things here the only difficult parts in this case, we have this information here, this information which happened in July. So the fact is we're preparing this whole thing in June, which means we don't need anything from this information in July. And then also we have taken note of everything that has been mentioned in here. Yes, so this was it, question 1. Then for question 2, I've already solved it. I did this one, which was wrong, because this thing has to balance like I talked last time. I gave you the format. So question two is a bank reconciliation. So they're saying Sin Tembo has received his bank statement for the year 31st October 2021 at the date. His balance is at the bank is 41,130. So the balance at the bank, remember, for bank reconciliation, the bank is assumed to be correct. If there's any mistake, which means that mistake has been committed by the person himself. So the balance at the bank was 14,130. So everything that we are doing was supposed to get a 14,130, but now in his cash book there is a balance of 47,330. They are saying his accountant investigated the matter and discovered the following discrepancies. So bank charges, we know that bank charges are always on the credit side. Bank charges are payments. The bank is charging you for rendering their services to you. No one that is found on the credit side means money is going. Bank charges of 60, that's the 60. Then checks drawn by Sin Tembo and totaling 450 had not been presented. That is, they have not been presented, unpresented checks. And remember, unpresented checks are found in the bank reconciliation. This one we're talking about is the updated cash book. No wonder I've not indicated it here. Next, they are saying Sin Tembo had not entered receipts of 530 in the cash book. Had not entered receipts. Receipts means received, debited. He received money, but he did not indicate that in the cash book. That is the receipts, the unrecorded receipts that I've recorded here. 530. This balance is the balance which is coming from there. The balance from the cash for 733, that's the one. Then unrecorded receipts, that is 530, that was not recorded. Then on D, the bank had not created Sin Tembo receipts of this paid into the bank on Shanshan. So he received receipts, but the bank did not create, that is uncredited checks, which is found in the bank reconciliation. Next, on E, standing order. Standing order is a credit balance. We've brought it here on the credit balance, that is the 1240, had not been entered in the cash book, of entered it. Then they're saying on F, Sin Tembo had entered payment of 560 in his cash book was 650. So it was supposed to be a payment, money went. So it was supposed to be 560, yet he entered a 650. So to correct this, we're going to get a difference, that is a 650 minus 560, which is giving us a 90. Since he entered a big amount, to correct that, we are putting it on the credit side. No wonder it is coming that 90 that side. Then next, a check received for 300 from a debt had been returned by the bank, marked refer to drawer. That is a dishonored check. It was returned. It was dishonored. You know, and that dishonored for check is found on the credit side. That is it, 300. Then an odd check payment of 880 had been written back in the cash book, but the bank had already honored it. So since it was already honored, we're going to write it on the credit side. That is the 880. Then some of Sin Tembo's customers paid to settle their debts by direct debit. Unfortunately, the bank created some direct debit amounting to that to another customer. So since the money was supposed to come to Sin Tembo, but it was credited into some other customer, so which means that's a wrong credit. They have credited the wrong person. So since a wrong credit always, that's a wrong debit, that's a wrong debit. So since a wrong debit moves with uncredited checks, we are going to take it to the side of uncredited checks. So this is the cash book that we have updated here. Then adding this side, the credit side is having the balance of 32,300, that side. Then this is the biggest figure that we have both sides. We'll write it here. Then this minus these things, we have this balance. This is the balance that we have started with here, 32,300. Then since we're starting with the balance as updated cash book, we're going to add unpresented checks. And unpresented checks, they're saying checks worth 450 were not presented. That's why I've added here, finding this figure. Then less uncredited checks. Uncredited checks, we had this statement where uncredited checks, we have statement D. The bank had not credited Sin Tembo with receipts of 1970 paid into the bank. It was not credited, so that is the 1970. And also this wrong debit, the money that was debited into wrong person, direct debit, so that's a wrong debit. We've also added to uncredited checks. We are finding this total. Then this minus this, we are arriving at the balance in the bank statement, the balance that is at the bank statement. So in this case the table is correct. Oh, you just have to know that bank charges, dishonor check, standing order found on the credit side. Then here this side we only have an interest, if interest received, and also dividend received. This were mentioned, you're supposed to be on the debit side. Yes, otherwise this is